Hello, this is Paul Cramey. Welcome to this video. This is an introduction to a labor rate calculator, which is a new tool that is being offered and provided to control customers. I hope you will find the calculator of interest, and will use it as you're setting up control for the first time, or just as a way of reviewing the labor rates that you're currently using in your system. I'm going to switch my view here so we can look just real quickly at control. What I've got is I went to the production section and then adjust part information, and then I've got view parts by type. Then I've chosen labor and all templates, and what we're seeing is all of the equipment or the labor parts that are in my system. And the focus of our conversation is the unit cost. Those are the numbers that we want to validate or provide a new number for them. Now, before we get into the calculator itself, I want to just go through some and make some just introductory comments that I hope will be helpful. Whether control is being used or being set up for the first time or has been in use for some time, it is important that the control labor rates be estimated accurately and be regularly reviewed. The control labor rates are based on labor-related expenses that include production wages that have been paid, employer-paid taxes and benefits, and also fixed operating expenses. Then the estimated labor rate then is the result of the sum of those three expenses divided by the productive hours worked. And because of the importance of having accurate estimated labor rates, you're encouraged to use the labor rate calculator as an aid. The use of the labor rate calculator assumes that a setup person will be given the task of coordinating the gathering of the information that's needed to produce the labor rates. Then, because of the sensitive nature of the information needed, the setup person likely will not have access to the labor-related expenses that are needed to complete the task. Therefore, the setup person will request this information from a payroll person for the wages and hours worked, and from an accounting person to get other expenses, for employer paid benefits and things like that. Now, the labor rate calculator is an Excel tool that's available to all control users that have access to the Sirius.com website. To get the labor rate calculator, log into the website, and if control is being set up for the first time, choose training, and then choose setup steps. If control has been in use for some time, then choose training, then choose basic training. From both of these links, you will be able to watch the introductory video and then also download the labor rate calculator tool to your local computer. Now I'm going to switch again to so we can actually see the tool. Going to take these one at a time. So what you're seeing on your screen is all three of the files. The labor calculator has three files that are involved. Worksheet A is on the left, and this is the one that was to be used by the payroll person. The spreadsheet in the middle, worksheet B, is the one that will be provided to the accounting person for the other information. Worksheet C, over here on the right, that's where the results end up from the first two. And that's where the results that will be used to enter the values in control will come from. And that's going to come off of the calculated results from this area that I'm circling by over here on the right. Now, I think what's important is to understand the structure of the way the worksheets work together. All of them have a title section across the top, and that basically gives the name of the worksheet. And then they all have a purpose, and that's kind of just a brief statement of what it is that's to be included in each of the respective worksheets. And then there is a series of instruction steps. So worksheet A has 5 distinct steps. Worksheet B has 3 steps. Worksheet C has 2 steps. So the way the process would begin is that the setup person that was tasked with pulling this information together will download these 3 files, and he will send worksheet A to the account or to the payroll person. And in parallel to that, he will send worksheet B to the accounting person. And at that point, the setup person really needs to sit and wait or work on other tasks while the 2 others are preparing the data. Now, the payroll person has a couple of general parameters to enter, basically the number of closed holidays a year and the number of paid time off for vacations and sick days, and then the specific information for each individual employee. And that's going to be entered into section A here. Once the information starts to get entered for each employee, the calculator is going to calculate the values associated with section B. Now, the important thing to understand is that the name of the person is going to be entered, their gross wages paid is going to be entered, and that's going to include regular pay, overtime pay, holiday pay, sick pay, and things of that nature. So it's the gross wages earned for that employee. Then off of the payroll reports, they would enter the gross hours for which that person had been paid. So those are the 3 things that are more payroll related than anything else. Then in conjunction in working with a production person that has a good feel for what each individual person is doing, and are they working in the production area? Are they working in the sales area? Are they working in office and administration? The key one that we're most interested in is the production. So they would estimate, the production person would need to estimate what percent of each person's time is involved in the production process. It might be 100%, it might be 96%, and so on. And if they're involved in multiple areas, that's fine. Just make sure that they total the 100% for the 3. Now, those numbers, the percentage is critical because that's what's going to calculate the total wages paid over here in section B. And it's also going to determine what the productive hours are that's also reflected in section B. So notice that 1782 is the gross hours. When you back out holiday time, you back out PTO time, and you inject the percentage of their time in production, that's what influences the productive hours. Now you've noticed the dark gray fields, columns and rows. These are illustrations, they're samples, and they're there for a specific purpose, just to give you an illustration of what's involved. Now, once all of that data has been entered by the payroll person, down here at the bottom in the blue section that says results total, these 2 numbers here, the payroll person will send an email to the setup person with those two values. And the payroll person's task is complete. Moving over to the second worksheet, B, the accountant or the accounting person is going to enter in section A the payroll taxes that the employer is responsible for paying, the employer paid benefits for hospital or for medical and other things, any fees that are associated with payroll processing, and any other miscellaneous employer paid expenses. In section B, the focus is the fixed operating expenses. Fixed operating expenses are those that tend not to be heavily influenced by sales levels. So they pretty much are not constant, but they stay relatively stable as a percent of sales. That includes sales and marketing, dues, travel and meals, occupancy, administrative costs, business insurance, miscellaneous expenses, miscellaneous income. And notice the text in small fonts. That includes additional information as far as what type of expenses might be considered as payroll taxes. What kinds of expenses would be considered as sales and marketing related. Now, just like with worksheet A, down at the bottom in the blue row, that's the results. So this represents the total employer paid expenses. This represents the total employer paid fixed operating costs. The accounting person is also going to send that result to the setup person. And when the setup person gets the email with the results, then they will enter that. So if it's the payroll person, they will enter the wages paid, the productive hours worked, and from the accounting, they'll enter the employer paid expenses and the fixed operating expenses. And with those four numbers entered, the calculations down at the bottom with all the blue headings, that reflects the results. And it's this number right here that is going to be the one entered into control for each of the labor parts. Now, I want to digress for just a second and talk about some perspective perhaps on labor rates. Every business has a different makeup of production wages, employer paid taxes and benefits, and fixed operating expenses. And what that means simply is that there is not a one size fits all for estimating the labor rate, your labor rate. It might be helpful, however, to comment on some historical averages that I have created over years. And that information is based on 40 clients that I have captured data on. Now, I've separated it into the three categories for production wages, for fixed overhead, from our fixed operating costs, and from taxes and benefits. These numbers for these 40 or so clients, they all have different sales volume. So there's some impact on these values based on the sales level. But from at the low side, the production wages probably would be expected to be somewhere in the vicinity of $16 an hour. On the high side, they might be 26 or thereabouts, and there might be an average of about 20. The fixed overhead rate also might come in at around 16 with a high of 26, with a high closer to 23 or so. The taxes and benefits on the low side, probably $4 an hour. On the high side, maybe $9. And I would expect that average to be somewhere in the vicinity of 6. Now, on a total basis, that would indicate that the total labor rate would be on the low side at 44, on the high side somewhere around 55 or a little higher, and the average might be somewhere in the vicinity of $50 or so. Now I'm going to change my view here. And looking at an actual example. This is a client that it was recently I worked with. They have 5 holidays of the year. They have 5 PTO days a year. This is their list of employees that they got the data off of their payroll. They worked with the production person, and this is the distribution of where they worked on a percentage basis. And from these 9 columns or 6 columns, these calculated values were developed. So the gross wages paid proportionate based on the production percentage, and the productive hours based on the production percentage, and also the closed holidays and the paid time off. So the results of this are down at the bottom. So the gross wages paid is $152.8, and the hours is 66.22. So assume that that has already been emailed back to the setup person, and they would have entered that over here in worksheet C, where I'm circling with the gross wages and the hours there. Similarly, these are the values that were entered for the employer paid benefits, along with the total of all the fixed operating expenses and its total. Assuming that that had been emailed back to the setup person, those numbers are reflected in these 2 rows. Now, all of those together result in the production labor calculations at the bottom. So the average production wages is $23 an hour. The fixed operating costs are closer to 30, and the employer paid taxes and benefits are 7. So what would be entered into control for this particular client would have been an hourly labor rate of $59.67. That might be a little bit on the high side, but I have to keep reminding myself and others that the location of where this person is in a much higher labor rate area, and with significantly higher taxes. So that that influences things quite a bit, is the where they reside. Now I want to come back and talk about 3 things that really truly influence the results that are obtained. The first one is the holidays, and the second one is the paid time off. So pay attention to the hours here. I'm going to change that from 5 days to 10 days. And notice that the hours went down. They went down from 66.23 to 64.90. So not quite 200 hours. Likewise, if I change the paid time off from 5 to 10, it's going to go down again. Now it went down to 63.50 from the 66, about 300 hours total. But it has a fairly significant difference on the hourly rate. If I were to put those numbers here, then you would see the results of that. Let's just do that real quick and just see what. So it's 63.58.76. That brought it up to $62. And the reason is that the hours went down because of holidays and PTO, but the wages remained unchanged. So my point is that be very much aware that the holiday hours and the PTO hours, and then lastly, the percentage of time in production, that one also has a significant impact on the labor rates. Now this concludes the comments about the tool. I want to go back to the agenda for just a second. And if you have questions, or if you need assistance, or you want to offer some suggestions on the tool, please contact us. My email is there, paul.cramey at Cramey Consulting. And then you can also, or you can just contact the Serious Consulting Department at the email there. I hope you found this video helpful, and you'll give some consideration to using the tool to help you determine what your labor rates are. This is a conclusion. Thank you very much for watching, and hope to hear from you sometime soon. Thank you.